With the dollar strong and travel being hot, that is good news for Visa, and they certainly showed that on their quarterly earnings, which came out after the bell. But the stock, not quite as hot, selling off in the after hours. We'll talk about some of the reasons why. We'll talk about if this is a good buying opportunity for Visa. What is going on, investors? Hopefully, guys are doing well out there. Time to talk about Visa, ticker symbol V. The company reported their earnings after the bell year to date. Pretty much flat, 4%. And some of that has to do with the tailwinds behind this company, the fact that they benefit from a lot of travel spend, inflation in general. The more you spend on your Visa, the more they intake in fees. Those things tend to be good for this stock, but it is relatively flat year to date, down about 4%. You get a minuscule, we're talking about under 1% yield on this one, although it continues to grow. They also are aggressively buying back the stock over at Visa. And certainly when we have stock markets that are off by quite a bit, a stock down 4% year to date actually is a pretty darn good performer. Now, we had those Q3 numbers come in from Visa. Revenue surprised to the upside to $7.3 billion. That was 19% growth year over year. They beat expectations by about $230 million. Now, shares were initially up by about 3%. I think as investors started to digest these numbers, maybe they're wondering that if a recession does hit and maybe the dollar gets weaker, well, all of a sudden those tailwinds turn into headwinds for Visa. I'm not saying that necessarily will materialize, but that could be going through some investors' head. They also beat on the earnings side. I'll show you that in a second. Now, what we're seeing across Wall Street is I have revenue estimates over at Visa, but quite frankly, you could copy and paste the year-over-year growth rate onto like 10 other stocks that we've been looking at. Wall Street has essentially said mega cap stocks like Visa are going to turn into kind of a low to mid-teens grower for the foreseeable future. They're seeing that on the revenue side and for the most part on the earnings side, with earnings acceleration towards the back half of next year. I don't know if analysts are projecting that maybe the dollar gets a little bit weaker, so those EPS on those multinational companies tend to go up a little bit, or if they're just thinking that companies are doing cost cutting and those types of things, that maybe we'll see an acceleration in earnings. Also, when you factor in Visa, we also have heavy stock buybacks in this one, and so that naturally will tick up EPS as well. That's why it's tricky to look at EPS as a stat. I tend to focus on things like revenue and operating profits, whereas a lot of investors focus on PE and EPS, which can easily be manipulated by share buybacks. The more you focus on the things that the executives can't manipulate, the easier your life will become as an investor. Now, from a helicopter view down onto Visa, things look glorious. Or net revenue's up, like we said, 19%, when again, the Wall Street's expecting kind of a mid to low teens grower. I tell you what, keep up 19% next couple of quarters, stock's probably going to go higher. Net incomes, earnings per share up 20, 30%, payment volume up 12%. Again, some of that has to do with inflation, okay? You have inflation running at 9%, so all things being considered, your payment volume should go up by about 9%. You have cross-border volume. Obviously, when you have such insatiable appetite for travel combined with a strong dollar, affluent and wealthy travelers here in the United States can take their dollars and go other places and make them go pretty far. That should be a tailwind as long as that maintains itself. Across the board, you're just seeing growth over at Visa. Now, speaking of those buybacks, during the most recent quarter, Visa repurchased 12.2 million shares at a price of $202 per share for a total cost of $2.5 billion. Currently, Visa's sitting at about $212 per share, so they're certainly doing well on those purchases. Now, for the last 9 months, the company repurchased 45 million shares at an average price of $207, nearly $208 per share, using $9.5 billion of cash on hand. The company still has $7.2 billion of authorized funds for share repurchases. I tell you what, when we look at analyst estimates, especially companies like Microsoft and Google and Visa, well, they're buying back the stock. So all things being considered, plus factoring in inflation, okay? With inflation, you'd expect that to naturally inflate your revenues. And if you do a decent enough job controlling cost, well, it should increase your EPS comboed with billions of dollars in buybacks, well, that's the recipe to grow that segment of the business. Now, from a more detailed level view over at Visa, some interesting things to show you, stuff that we don't normally see with Visa, or really a lot of companies out there. Far left-hand column is our most recent quarter. The third quarter came in at $7.2 billion. If you want to annualize out this $7 billion number, again, you're getting pretty darn close to about $21.5 billion for the 9 months. The first, second, and third quarters over at Visa, relatively steady. We should see an acceleration as we head into the fourth quarter. Really, the first quarter over at Visa will be that holiday shopping season. For the most part, all the cost remained in line as you'd expect. Personnel going up, looks like north of about 20% on that expense side. With inflation where it's at, hey, look, that is what it is. But we did have litigation provision. That really stands out. Over $717 million worth of litigation provisions that Visa set aside, looking like they're going to lose a massive lawsuit. And it is massive, okay? It's more than half of their personnel costs, which is by far their biggest cost. You see, total operating expenses in the most recent quarter went from $2 billion all the way up to $3.1. Again, factoring in a lot of that is this $717 million of litigation provision, which we'll assume, as long as Visa doesn't get in trouble again with the law, will be a one-time type thing. Now, it still is pretty amazing. The fact that they had $717 million of one-time costs come on the books. Our operating income still went from $4 billion up to $4.1. Really shows you the strength of the quarter, where they went from $6.1 billion, again, up about $1.1 billion to $7.2, nearly $7.3 billion worth of revenue. Without this litigation provision, I tell you what, you had a really, really nice quarter. You flow all the way down to net income. It's flowing all the way down there too. $2.6 billion last year in net income on a quarterly basis. This year, 3.4. Folks, you earn over $1.60 per share on those common shares. This is why we talk about this, especially from a dividend growth perspective. Every single year, Visa's raising their dividend by like 10% or so, because right now they're only paying you $1.50 per share for an entire year, and they just did a quarter where they did $1.60. Now you're getting supplemented a little bit with these buybacks as well. So combo those together. Quite frankly, that's why you buy, or that's why I would buy and hold a Visa. In full disclosure, I do buy and hold Visa shares even to this day. Now, in terms of the balance sheet, you'd expect with some litigation provisions and those types of things, the buybacks, well, your cash assets slid down over the past year. And we see down here accrued litigation up to $1.5 billion. It was south of $1 billion about 9 months ago. So the lawyers are getting rich over at Visa. Now, from a cash flow perspective, it paints a glorious story. So we pull down a 9-month net income number over here. Last year, we're sitting about 8.7. I think we thought that was good. And we figured last year there was going to be some tailwinds of travel. Well, those tailwinds came in and we pumped out to $11 billion worth of net income. We get to add some things back, including that accrued litigation, although that's relatively small add back, and we get positive cash flows by those operations from 11.2 up to nearly $13 billion. What I love about Visa is they don't have to invest a lot into their business. You see here, purchase of property, plant, and equipment essentially went from $497 to $675. That's essentially a rounding error when you look at this company's cash flows and their revenues for that 9 months. Again, remember, this is a 9-month number. This is why they can buy back the shares and pay a ton of dividends, is because they don't have a ton of use for the cash other than that aforementioned accrued litigation. In the quarter, we paid $2.4 billion worth of dividend. We talked about how they had $9.5 billion worth of repurchases over the last 9 months. So like $3 billion a month. Last year, sitting about 5.7. So they've accelerated that. They did issue some senior notes, as you see here, take on some debt here, $3.2 billion. But I noted the interest rate as I was going through this, and I think it was south of 2%. If anybody wants to loan me $3.2 billion south of 2%, you know where to reach me. Now, from a technical perspective over at Visa, Interesting technical setup. Okay, so really since July of last year, so we're actually going back a year over at Visa, we've been making lower sets of highs here, and the lower sets of lows are in there as well, but they find a floor down here at about 190. I tell you what, Visa steps in. They showed you, okay, on their buybacks that they've done over the last 9 months. Where is this company stepping in? Right around $2 per share to about probably up to about 210. Since this is the average price, they probably paid a little bit over that. They probably paid a little bit under that. My guess is this company just kind of has an automatic buy underneath this $210 per share, because you see, anytime the stock especially gets under 200, it pretty much makes a rapid comeback. Now, we are not confirming this with higher highs, but when I look at a chart like this, boy, there is so much sideways consolidation. So if you believe in the buybacks, if you believe in the dividend growth, if you believe in the long-term story with Visa, right now, probably wouldn't be a buy at about 212, but more than likely it will head its head on this trend line here and we'll make our way back down south of 200. That's where I would, if you already have a position, add a couple shares. Absolutely nothing wrong with that, especially when we factor in the dividend and the buyback. From the very bear case scenario over at Visa, if you break through this 190 level, it is up in the air where this one would go. My guess is you're probably going south of 180, because this would be such a firm level from a technical perspective. It would scare a lot of bulls out of the building if you were to break that level. But again, you're supported by this buyback. You're supported by the fact that a lot of shareholders that buy Visa are holding this one for the long term because of that powerful dividend growth. I know the yield right now is just 0.67, but if you hold on to this for a long enough period of time and they grow their dividend, especially at a double-digit rate, comboed with that buyback, and you have the recipe for pretty steady investment over the long term. Would I make Visa a top 5 holding in my portfolio right now? Probably not. There's so many sales in the stock market. I'd probably rather go some other directions. But if you're closer to retirement, or if you're closer to somebody that doesn't want to take as much risk, look, over the past year, stocks just down 4%. Stretch it out a little bit longer time frame, you are down 15%. But then when you start stretching this out to 5 years, 10 years, you see that you get that capital appreciation combined with those dividends. Certainly is a winning investment for the long term, but I think the mega growth days in Visa probably not in the foreseeable future. Hopefully, you guys enjoyed today's video. We'll be back again soon with more. Good luck with your investments.